Listings flood the market. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this realestate.com.au article, which is discussing, just showing us how many listings are starting to flood the market. So house and land suburbs are among areas to see the largest increase in new listings, but they don't mention the ones which have gone over 160%, which are the units. That should be the title. Suburbs abundant with new housing stock are among the areas that have seen dramatic increase in the number of listings advertised over the past 6 months. What does that tell us? What's going to happen, guys? Data compiled by realestate.com.au shows that Sydney dominates the national list, with 7 of Australia's top 10 suburbs to record the biggest jump in listing numbers for houses located in the harbour city. For units and apartments, Sydney suburbs comprised 8 of the top 10 spots for the greatest increase in listings. So Austral in Sydney's southwest saw a staggering 140% upsurge in house listings between May and October this year compared to the same period last year, while the inner city suburb of Ultimo recorded 169% jump in unit listings. Look at these year-on-year changes. 140%, 83%, 79%, 169%. Units, 136. A low number in this list. The number 5 is 102%, everyone. Increase in listings. Come on. This is the market getting flooded. Property is starting to flood the market. Are people trying to cash out, everyone? Are they worried? Are they thinking this is a dead cat bounce? Wow. The statistics also reflect increases for house listings of between 71 and 83% for the Sydney suburbs of Marsden Park, Hornsby, Mayayong, Stanmore, Box Hill, and Taramaru. Unit listings in cities Marsfield and Rockdale each experienced increases of 136%. Shouldn't these be warning signs, everyone? We've seen unit prices in Sydney start to fall, start to correct as people are getting out. We've got all these things, these interventions in the market. You've got JobKeeper, mortgage holiday, trading while insolvent, moratorium on investments. You've got banks not repossessing properties or promising not to do it. You've got job seeker. You've got stamp duty slashes everywhere. You've got governments handing out money left, right, and centre to get people buying property. Look at these listing increases, guys. Are people wanting to get out of these units? You've got unemployment at 7%. First recession in 28 years. Could this be the final hope? Because, I mean, you talk to people. People are mentioning in the comments they've got friends who are jumping in. It's going crazy. It's nuts. I can understand units. I can appreciate houses more than units. I can see why people would go a house, get more space, more breathing room. It's good. With a unit, with all the construction issues that have happened. So, the data compares the number of listings between the 6th month from May to October 2020 with the same period in 2019. Suburbs must have had at least 30 listings in both 2019 and 2020 to be included in the analysis. Nerida Conisby, chief economist at realestate.com.au, said the greatest increase in listings for houses was largely in house and land suburbs. Well, you know what that is. This reflects house and land prospects, which picks up the fact that there are lots of homes in the area, particularly for the first home buyer market, Ms. Conisby said. The majority of the list focuses on new development, and then it seems to reflect that there may be some investors getting out of the market. In Sydney in particular, there may be some investors selling out in some of these areas. I think a lot of them would be the units, people getting out of these units, mate. Where you can't kick out bad renters, or what probably is going to play, the death of immigration disappearing and our tourism sector getting hit. What if you bought one of these things? What if you got a unit you bought to go for a family holiday and you can't even go there because of lockdowns or restrictions? What if you think about all the people in Melbourne who have bought units on the Gold Coast or Brisbane? I mean, we even had one. We lived in Melbourne. My parents had a place up at Noosa, little townhouse. We'd go there 2 or 3 times a year for holiday. And with the lockdowns, you wouldn't be, you're probably trying to get out real quick. I remember once as a child, actually, I said to my parents, can we go on holiday? And the next day we just went up to Noosa. It was great. I think Horst, my father, wanted to make sure, because the manager of the complex said it was empty, so he wanted to just surprise him to make sure it actually was, because he didn't trust him. He thought he was lying to him. And guess what? There was someone staying in the townhouse. Funny that. Ms. Conisby said while renters were rebounding after COVID, the absence of foreign students was still affecting the unit market, particularly properties located near universities. A lot of the job loss had been among young people, so we are seeing a lot of younger people move into shared accommodation or moving back in with their parents, she said. Some of these suburbs are where we traditionally see a lot of young people living, so there are lots of units. So it does look like there are investors selling out, particularly in Sydney. I wonder how many of those are in people's super funds. I wonder how many people thought buying a unit that was like everything else next door to it is a good investment. I mean, the location may be good, but there's nothing unique about it, nothing special. Maybe if we looked at another article where school catchment zones were playing a part, not so much in university, you can travel for uni. So she expected a cautious turnaround in Melbourne market in coming months with the end of the second lockdown. In Melbourne, there's been very few transactions occurring during COVID, so people have not bothered listing. What we will start to see is quite a big pickup in listings for developments in Melbourne, but that doesn't seem to be showing up yet. Sydney agent Sammy Yildiz from Co and Lee Property Group, Primant, said Ultimo was experiencing an excess of apartments for sale, many of which were lingering on the market. The apartment market in Ultimo is oversupplied at the moment, and there's a lot of stock on the market that's been on the market for 6 months and not moving, he said. 6 months. I've had friends who bought into a development, they financed a development, and they refused to sell it at a lower price. They're just holding on to it, the developers. And it's taken years. Years now, they're sitting there, empty. They're hoping for foreign buyers to come in and take it. Have to see how it keeps going. But I'm glad I didn't jump in on that one, because it's, not the smart way to do it. So it's definitely COVID related because the borders are closed. Interstate borders are closed. People aren't able to travel. Local buyers just don't have the money. A lot of people have lost their jobs. Their borrowing capacity has reduced because they've lost their business or income has reduced. He said that the absence of overseas students was also impacting the market. Remember, we've been talking about this for months, that international students are going to make an impact. A lot of unit accommodation is empty at the moment because students are still stuck overseas, and that contributes to the current state of the market. What happens if, say a country that Australia has trade issues with, maybe puts their foot down and says, nope, you're not allowed to go there anymore. Rents have gone down significantly, in some cases 50 to 60%. Properties that were getting $600 a week are now looking at $300 a week. 50 to 60% rent reductions. Think about how many people have negative geared these things and are making a loss at $600 a week. Well, I mean, they'll be happy then. They'll negative gear. It'll be even more efficient negative gearing. So we're going to see this correction. There has to be a correction in the unit market. Look at that. Those yields are going to suck. Taramaru in Sydney Upper North Shore appears to be buckling the trend of listing surges in new housing suburbs. The established suburb ranked in at number 7 nationally on the top of its top 10 suburbs, and the biggest jump in house listings was with a 71% increase. Ray White, Upper North Shore Daniel Walter, said there was a lot of activity around Taramaru and neighbouring suburbs across all price ranges at the moment. Typically, if the lower end properties are selling well, the upper end is a bit quieter. Whereas in the last 2 weeks alone, I've sold 3 properties above $6 million and have a 4th with an offer on. So the upper end is going really well, and the entry-level properties are strong as well for apartments to first homes, he said. Mr. Walker said he had not identified a significant increase in the number of listings in Taramaru in the past year, but buyer sentiment and interest were high. It's been the same sort of numbers we've seen typically for the last 12 months. But with the end in sight of the lockdown and a vaccine on the horizon, I think buyers are realizing that in 2020, 2021 sentiment is going to be good, and the time to buy is now, he said. Buyers are a bit anxious about the market moving, so a lot of people are jumping into the market now. I don't think anyone has a negative outlook on the real estate market for the next 12 months. People are trying to get into the marketplace now before the market jumps. Well, not if you're buying units in oversupplied areas. So where listings have increased state by state. While many of the suburbs with the biggest increase in listings were new housing areas, the results vary between states and territories. New South Wales, the southwest suburb of Austral, saw a 140% increase in house listings in the 6 months to May, compared with the same period last year. Listings for houses grew by 83% in Marsden Park in Sydney's northwest. Ultimo, 169%. Victoria, Kalgoorlie, North Melbourne, 67%. We'll just skip through here. 37%, 33% in different suburbs. Alton North, 65%. Queensland, Burpengary East, Moreton Bay, a 54% rise in listings. There you go. Coopers Plains, 52%. Spring Hill, 102% listing. Well, that would be student accommodation there coming on the market that aren't worth a penny anymore, really. If they can't earn you money. Here's the thing with these units. If they can't earn you money, no one's going to stay in them. Maybe you're restricted to who can actually stay in it. Some of these complexes only allow students in them. And then you've got all the maintenance fees. Is it worth keeping it? South Australia. There was a surge in the number for Hillbank, 50%. Fulham Gardens, 32%. Prospect, Adelaide rose 29 and 16%. WA, Forest Field, 65. Padbury, Lesmere and Bentley, 60, 59, 56, 52. Riverdale, 75%. Como, 35%. Tasmania, 14%. Yeah, nothing as dramatic in Tasmania. Beautiful houses, though. And Canberra, 42%. So we're really seeing it manifest in Sydney significantly. Much higher than any of the others. 140%, 169%, everyone. So, looks like investors are trying to get out, everyone. Are you all surprised? Is this just the tip of the spear? We'll have to see. As always, please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays or Teespring. You can use Gold Pass from the Perth Mint or support us via PayPal. Take care, guys. I'll see you next time.